Hi, ladies and gentlemen. It's Aaron Fragnito with People's Capital Group. I'm going to do a review here of a recent offering we have. Very exciting time right now. We're getting a huge amount of activity on this new offering in Bayonne, New Jersey. I'm going to break into this today. We'll do a 15, 20-minute presentation about this new private offering. Again, if you haven't gotten qualified to review this offering, this is a bit of a sneak peek in. You still have to complete your discovery call with me, Aaron Fragnito. If you haven't done that yet, that is part of the qualification process. But I want to make this video here so that our non-qualified investors can just get a sneak peek of what we're doing here, what it looks like once you are qualified to get access to this information and see if it might be a fit for your investment goals. Again, it is very important that if anytime you feel like you're ready to move to the next step, just click that link below so we can set up that call and get you qualified so you can start to review this in more depth at your pace. So here's a 21 unit in Bayonne, New Jersey with huge value add. Rents are about 35% below market value. And you can see here, nice, beautiful building, nice brick building, kind of a pre-war style. And we'll go through the pictures here so we can just get a feel for how this building looks here, how it's situated. See, Bayonne, New Jersey is one of the more desirable locations here in New Jersey. It's located in Hudson County, which is one of the hottest, most high demand, highest priced markets in New Jersey. Hudson County is borders the water there going to Manhattan. So you have Hoboken, you have Jersey City, and then you have Bayonne in that order, okay, kind of coming down the coast there. Now, Bayonne has one of the most landlord-friendly rent control laws, where Jersey City and Hoboken, it makes it really hard to be a landlord. It's extremely strict rent control. There's no vacancy decontrol, meaning when someone moves out in Jersey City or in Hoboken, you can't even reset the rent to market value. You actually have to rent it out for what the last guy rented it for. Now, if you do a bunch of renovations to the unit, you can go to the rent control board and they'll allow you to increase the rent a small fraction of your renovations. But generally, it's not even fair as far as how much you have to invest in the unit to get the rent up to fair market values. So investing in Jersey City and Hoboken for that reason is very difficult as a landlord. And that's one of the reasons we like Bayonne more than those two cities. The other reason I like Bayonne over those cities is because you get a lot more real estate for your dollar in Bayonne over Jersey City or Hoboken. You tend to have a little bit higher cap rates, kind of depending on the market of Jersey City as well. But because of that, we really enjoy this city. We enjoy this building here. It's a nice brick building. It's actually very well kept. It was owned by the same family for 40 years. You see the lobby here, the entrance, and you come into the building. It's beautiful. It's just strikingly beautiful. I mean, look at this workmanship on the trim here. It's really incredible. The crown molding. I mean, that's not even crown molding. That's just incredible trim work. So you don't see this much anymore in newer construction buildings. But just a really clean building overall. Classic situation where the building's in good condition, but the units are a little outdated, as you can see here. Really not that bad, but slightly outdated. And just kind of a basic kitchen there, but nice molding overall, nice condition overall, and just needs a little bit of lipstick on a pig, a little bit of cosmetic renovation to the units here, so we can make them more updated and attract a higher quality tenant, a higher rent amount as well. So we're going to cosmetically update units as tenants move out, and that's going to allow us to lease up these units for a higher rent amount. You can see there's not a whole lot to do to a lot of these units, right? Just spruce them up, kind of make them a little bit nicer. Some units are worse than others, but this is one of the more updated units. But for the most part, just a really nice turnkey building that's mismanaged overall, but not really deferred maintenance-wise all that much. You see here are these separate electric meters for the tenants. Now, one of the main value adds we're going to do for this building is separating out the heat and air conditioning. Right now, the units do not have AC, central air. They have window units, which are less desirable. We are going to put in those Mitsubishi mini splits, which allows the units to get central air now and switch the heating cost over to their meters as well. So by separating out the utilities, not only do we create air conditioning in the units, which is going to allow the units to rent for more money and be more desirable, but we're also separating the utilities off our balance sheet onto the tenants' costs. So that's going to put a lot more to our bottom line. In fact, about $21,000 a year we'll save in heating costs. And of course, we'll get more for the units as well because they'll have air conditioning. Here you can see the front of the building, nice nighttime picture. The one downside of the building, it doesn't have parking, but that is pretty common for Hudson County properties here. It's a 10-minute walk to the light rail station, 1-minute walk to a bus stop, and there's a ferry going in Bayonne, which is going to really help our property values there as well. In total, we have two offering classes here. We have Class C, which is your 5% preferred rate of return, $30,000 minimum investment. The window of time to invest in that is until November 1st or until shares fill up prior to that. Then you have Class B. That's a share class you have to move faster on. The deadline to invest on that is the end of this month, October 1st. The minimum investment is $50,000, and the preferred rate of return is 7% for Class B. Okay, so the minimum investment there, Class B, 50,000, Class C, 30,000. Total cash on cash return, taking into account the equity split, which is 70-30, with the investors getting 70, People's Capital Group getting 30%. So after our preferred rate of return is paid to our investors, our 5 or 7% annualized preferred rate of return is paid, then there's a 70-30 equity split after that. That allows our investors to get a total return on investment. We target around 10.5% annualized cash on cash return is our target for Class C investors, the lesser share class. For the better share class, the $50,000 minimum investment, 7% prep. With the equity split, we expect those investors to get about a 12.5% annualized cash on cash return. Okay. So taking into account our pref rate of return and our equity split, our investors would expect about a 10.5 to 12.5 annualized cash on cash return. Our targeted internal rate of return, taking into account those share classes, is 13 to 15% respectively. That takes into account your tax benefits as well, your internal rate of return there. And the term to invest in all of our projects is 3 to 5 years minimum. You also have the option to remain invested indefinitely. See, at the cash out refinance, we try to complete that every 3 to 4 years. At that point, our investors can opt to get back their initial investment, exit the investment, keep the funds earned from cash flow, keep the funds earned from the refinance. But of course, they'll have to pay capital gains tax on those earnings if they choose to get back their principal investment and exit the investment. So a better tax strategy is to remain invested in the property, enjoy another lump sum payout every 3 to 4 years as we do the cash out refinance. So make back your entire investment by the second refinance, generally by year 6 to 8. Enjoy cash flow all of that period as well on a quarterly basis. Enjoy tax depreciation at the end of the year to write off that cash flow. And then remain invested indefinitely. Just keep enjoying that lump sum payout of the big cash out refinance every 3 to 4 years. Quarterly cash flow checks, annual tax depreciation. It's a tax-free investment strategy and a tax-free investment overall where you can keep earning from the investment but not pay taxes on that as you're not exiting the investment, therefore not having to pay capital gains tax. So keeping your principal at work, invested indefinitely, sticking with us eventually through a 1031 tax deference where we'll sell the property and trade into a bigger property, building our investors' wealth exponentially, maybe 15 years down the road is our ultimate strategy. And that's why most of our investors have this long-term view of real estate, allowing them to build their wealth indefinitely and then move on to the next one as well as we refinance, give them a big lump sum of capital back, which tends to be reinvested in our next opportunity there as well. And that's how we've helped people build their legacy wealth and just build wealth in general year over year over year. I just sent back over $80,000 to one of my investors, and he called me up and he said, "Hey, you know what? I'm taking this $80,000 and putting it to put my kids through private school." I couldn't believe how much private school cost, apparently $80,000. So, but this gentleman here was able to put his kids through private school because of the return on investment from his investments with us. Now, keep in mind, his principal's still invested. He'll continue to get a big lump sum $80,000 check every 3 to 4 years on that property. Quarterly cash flow checks as well, and write that off with tax depreciation at the end of the year. And just a great strategy for our investors so they keep earning big checks, keep their principal working, not pay the tax man, dilute their tax burden in full from this investment, and essentially keep more of their money. Right? The more you keep, the more you make. The type of ownership is non-voting equity ownership. Our investors are passive investors. They don't call the shots day in and day out. The responsibilities of that, the headaches of that. They enjoy passive returns from the investment. We accept IRAs and solo 401ks. Our strategy is to buy, renovate, and refinance, repeat. The Class B funding deadline is October 1st. The Class C funding deadline is November 1st. The preferred rate of return for Class B, as I stated earlier, is 7%. Class C preferred rate of return is 5%. Once you're qualified, you can walk to the virtual tour. You can look at more pictures here as well. But again, to get qualified, you need to do that discovery call with me, Aaron Fragnito. If you haven't done that yet, go back to the email you clicked on here. Click that button that says, start your investment process, or click here to get qualified. And that's going to allow you to then move to the next step, fill out the basic application form, and schedule your discovery call with me, Aaron Fragnito. Here's the opportunity highlights. We kind of went through them already. The high demand Hudson County location, nice downtown location here, not far from a light rail station, 3 blocks to the water, Avenue C in Bayonne, really nice location. 16 free market units, 5 rent restricted units. Again, the rent control is more landlord friendly here in Bayonne as compared to other Hudson County cities. So that's one thing we love about Bayonne. Amazing value add, rents 34% below market value, more conservative 35% below market value. We plan to install the HVAC mini splits to reduce the heating costs on the owner while adding central air to the units. It's located in a great spot here, 10-minute walk to the PATH station with direct access to New York City. A new ferry is being built in Bayonne to cut travel time in New York City in half. And Bayonne is actually one of the strongest rental markets in the state. Rents rose over 15.7% year over year. The minimum investment is $30,000. The maximum investment is $700,000. Of course, for the Class B share class, the minimum investment is $50,000. For Class C, it's $30,000. Minimum investment period is 3 to 5 years, or you can stay invested indefinitely and build legacy wealth, as I explained previously. And our targeted cash-on-cash returns take into account the preferred rate of return plus the equity split, which is 70-30, with 70 going to the investors, 30% going to People's Capital Group. You add up both of those return avenues, you're going to get a targeted return of about 10.5% for our Class C investors, about 12.5% for our Class B investors, better share class with the higher minimum investment amount. So here's a summary of the offering. We don't have to go over this again. We just talked about this. Also, the internal rate of return is between 13 to 15% respectively, depending on your share class. The internal rate of return takes into your cash-on-cash return plus your tax benefits. We have the funding deadlines here are very important. They are very strict. So if you're looking at this now and it's getting close to October 1st, then you definitely want to click those buttons to get qualified, to schedule that discovery call. It takes a little time to get on my calendar, complete the call. Then you're going to have to review the information, have time to do that, and wire the funds by October 1st. There is a funding deadline here. We want to make sure at least the documents are signed by then. The funds can be wired a few days after that. But if you're trying to get in on the Class B, a better share class here with a $50,000 minimum investment, 7% preferred rate of return, then you want to act quickly now and certainly click that button to schedule the call with me, Aaron Fragnito. You can go to our website to do that. You can go back to the email. Either buttons are going to prompt you to fill out a basic application form and then schedule a call with me, Aaron Fragnito. This is a 506B open to 35 non-accredited investors. So you can be accredited to invest with us, meaning you're a millionaire with a net worth of $1 million, not including your primary residence, or you have an income of $300,000 as a household income, or $250,000, not including your spouse. If you don't make that cut yet, then you may fall into the category of a sophisticated investor. This is someone that's not yet accredited, but working to get there. They have the minimum investment amount of $30,000 plus excess savings plus ample income. They have the means to live on their salary and other forms of income, not having to live off the investment itself. They have the mental capacity to understand the investment opportunity and the experience to understand the opportunity and the risks therein. So most people who don't fall into the category of accredited will fall into the category of sophisticated, okay? That allows a lot more people to invest with People's Capital Group. See, here at People's Capital Group, we want to bring the power to the people. We want to help people build wealth the same way the top 1% builds wealth. The buy, renovate, refinance strategy is how the top 1% builds wealth. Also, accredited investors, millionaires, um, were normally the only ones who could have access to real estate funds such as ours. But since the Jobs Act in 2013 to 2016, now non accredited, sophisticated investors can participate in certain real estate funds if they're structured the right way. We structure our fund to help and allow for the average investor, sophisticated investors, to participate in our opportunities. So we work with accredited investors. We have multimillionaires that invest seven figures with us. We also have smaller investors getting started that are just sophisticated and learning the business and having that experience. And maybe they're self-directing their IRA of $30,000 or $50,000 in the opportunity. Maybe they've worked to save up money for some time and now they're putting that capital to work. So we really pride ourselves on helping people invest in real estate here at People's Capital Group. And not just multimillionaire people, people through the whole spectrum, sophisticated investors and accredited investors, non-accredited and accredited investors alike. So that's who we help here at People's Capital Group. And that's who we focus on helping. And that's really been our motto here for many years on our strategy of helping people invest in real estate. And I've actually made a lot of non-accredited people accredited because I've built their wealth for so many years and sent them so many big checks that now they're accredited. So that's a really great feeling for them and us as well here at PCG. One more thing to note here, we have low operator fees. For anyone interested in our fee structure, essentially we really have a very low fee structure compared to what other funds tend to advertise. We don't do a assets under management fee. That's a general fee that most funds charge, which is based on either rent collected or funds raised. We don't believe in that. So we don't do an assets under management fee. We don't do a disposition fee. That's the fee when you refinance the property successfully. We don't believe in that either. We have very low cost of fund creation. I was talking to a fund the other day, and they said their creation cost is like $60,000 to $70,000, and the first thing they do is turn around and invoice the fund for that 70 grand. You better bet that's going to eat into your profits. So we develop our fund for about $6,000, which is really incredible. There's different ways to keep your costs down. We have similar documents. We can rinse and repeat. We have good investor relationships with attorneys, so that allows us to get this done at a good price. And we have a very efficient process of completing our fund and our fund paperwork. So our cost to do that is quite low as compared to other funds, and that allows for better returns to our investors. We earn the majority of our income through equity ownership, our 30% equity ownership in the property. That means we have to perform to get paid, to put food on our plate ourselves. We have to cover the preferred rate of return to investors to then get our piece of the equity split. So it's very important that we achieve our goal on the refinance. Property appraises for that price, right? The cash flow is where it needs to be. The net operating income has achieved its targeted goal. If we don't achieve these targets, we don't get paid ourselves. So it's in our best interest to make sure these properties perform, to make sure that we're achieving those goals we set out to achieve from the start, and that we hit our targets on paper years down the road. And again, it's in our best interest to do this. Otherwise, we're working for free. So you better bet we need to perform on these assets to get our investors paid, to put food on our own plate, take care of our own families. And that's what we've been doing here at People's Capital Group for years, is setting up this win-win structure where it's not a fee-based structure, it's a fund for the people. We perform on this fund. And yes, when it does very well, it exceeds expectations, of course, everyone does well. But our funds are structured to protect our investors, make sure they get paid first, and People's Capital Group gets paid last. So that makes sure we have to do our job to perform and put food on our plate ourselves. So historically, our offerings have filled up very quickly. I sent the send button on this email earlier today. We have over 20 investors that now want to participate in this opportunity. So if you feel like what we're talking about tonight is a fit for your investment goals, you definitely want to go to peoplescapitalgroup.com, click the button that says register to invest, and start the qualification process. You can also go back to the email you received here, and you can click that button that's going to prompt you to invest to move to the next steps. Once you schedule your discovery call with me, Aaron Fragnito, we'll complete that call. It's about a 15 to 30-minute call. We're going to talk about your investment goals. I'm going to make sure you qualify verbally, and then I'll go into depth on what we're buying here in Bayonne, New Jersey, and how it's going to work for our investors and answer any questions you have as well. Once we complete that discovery call, you can then have access to this, the information here on Syndication Pro. You can log into our back office, go through this information. You can open up the PPM, the private offering memorandum, which you can see here, and this will allow you to view all the documents. And of course, you can also execute the investment as well, and that would allow you to then move forward on the opportunity, securing your investment with People's Capital Group. But it all starts by scheduling that discovery call, getting qualified, and then at least having access to this information so you can then decide if this is a fit for your investment goals or maybe wait for the next one. So no rush there. There's no pressure to invest, but the rush is to get qualified, make sure you're on our list, to make sure you can take a look at this opportunity and not miss the window to get in on the better shares or even the Class C shares, which is really ending in about 45 days as well. So make sure you go to peoplescapitalgroup.com. Let's connect. Let's do our discovery call. Let's find out if your investment goals align with our investment goals, and if you could be one of the many investors that we've helped build their wealth here in North Jersey real estate. I hope we can invest in this building together. This is going to be a great opportunity. I know I'm going to be sending some big fat checks to some lucky investors on this property, and I hope you're one of them. I'm Aaron Fragnito of People's Capital Group. Thank you for joining us tonight. I look forward to our discovery call. Thanks a lot.